Hey, what's up, everybody? It is almost 9 o'clock on April 10th, and this is the next installment of Forex analysis. Today, we're going to be looking at a few different pairs, but I want to do a quick risk disclaimer. So, foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so don't invest money that you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. So here is the first pair that I want to take a look at this week. If you watch any of my videos, you know that one indicator that I like to look at a lot is RSI. And I don't take it as a specific buy or sell signal, but I do like to look at it in terms of where I think that sellers will reemerge, strong sellers, and buyers will start to cover long. So as you can see from the CAD, we are in strongly overbought territory right now. So the RSI is almost at 80. It's around, probably going to be around 77. All right, 76. So I think that a pullback for the Canadian dollar is definitely going to be a possibility over the next couple days. We could have a little bit more to run, but euphoria is usually capped, and usually we see retracements down to medium levels. So, in my opinion, the market isn't efficient like that. People are very emotional beings, and seeing price movement on its way up is signal to buy, and the price will eventually make its way down to usually the median price, which is why I like to look at the 50% so much. So 50% retracement is around 0.998, and that's a pretty big trade, around 70 pips. So that's a nice little profit margin here. The risk to the upside is going to be very small, just because buyers are going to be strongly overcome by sellers, and there's going to be less buyer in the market than there is sellers. So that's the only really way I can think to describe that. It has a lot to do with build-up of credit and bursting of credit. So I like to trade destruction as much as I like to trade creation. So those are a few things that I look from the Canadian dollar. If you want to take a look at a couple of reasons why I do these trades, is as you can see, when we hit prices as high as we are right now, usually around 80, we have extremely large drawdown, so that's 100 pips. Drawdown over here is 140 pips. Here we have, this is even bigger. I mean, I obviously you probably wouldn't catch this whole trade, but this is, if you did catch it, is around 190 pips, and I can keep going all day. So like I said, I do like to trade these pullbacks. This is around like 60 pips almost. So these are things that I do like to trade a lot, especially from the Canadian dollar, because it's extremely choppy and you can get a lot of good profit from both sides of this pair. So I do think we are in a euphoric state right now for the Canadian dollar, and we are near the 100-day moving average. So a rotation down from that is a possibility. So an even larger move down could happen in the near term. So that is one trade that I really like this week. A couple other just more fundamentally based trades are, first of all, the Aussie has employment and unemployment tomorrow. So that's around 9:30 p.m. Nice time to trade there if you're on the East Coast like I am. And we should have some pretty good trading opportunities out of the Aussie. Looks like we already have had some speculators push this pair to the upside. If I did this video an hour ago, I would have said that we were in oversold territory and push the upside was possible. So again, you see these levels holding. And this close is at 1.2265, so that's going to be a level that I'll be looking at. If we do start to close below that, I think that a rally to the upside is going to be held off in the near term. But for now, it does look like a strong push to the upside is a definite possibility, and even longer than just a day. If I bring this into a little bit of a longer term chart, we've reached the 61.8, and looks like we have a failure to break below it, and so the downtrend from the Aussie. I am bearish Aussie. I do think that this pair is destined for below parity, at least, if not much farther than that. And so if we do have a pullback, I think it will be capped. Probably the backside of the fibs hold somewhat well, so around 1.036 and 1.0478 is going to be a little bit stronger just based on the 100-day moving average is also in that zone. So those would be selling zones for me. But like I said, right now we are oversold, so a push to the upside is going to be a nice trade for swing traders, and it might be a trade I like to put in along with the CAD. So that's just another indication that the dollar may be falling, and we should see some nice trading opportunities out of those pairs. Just to make sure that the euro isn't indirect opposite of what I'm saying is we are in a sort of a consolidation phase right now, a little bit of a range-bound trade for the euro after the FOMC minutes. This usually happens. We had a strong push down. Obviously, this bar was one of the larger ones, around 120 pips. So put that in perspective, it's pretty humongous move. So I am bearish euro, but right now the trading opportunities out of the eurozone are minimal. There isn't too much news this week. There's some U.S. news coming out, PPI, trade balance, and unemployment. But in terms of euro news, there isn't very much. So I think that's why we are consolidating right now. We're kind of in a zone that is going to define the trend just because we are in this extreme resistance and support zone here. So like I said, the euro should break out over the next couple weeks, but just for today, I don't think that it is the best pair to trade. And if you're looking for the best profit potential, definitely the Canadian dollar and the Aussie dollar are the places that I'll be looking, and I believe you should be too. So thank you very much for watching, and if you want to follow us at SynergyFX during the week, we'll be posting updates, and good luck trading out there.